Today, we're going to talk about the single most important part of investing. And here's a hint. It has nothing to do with picking the perfect stock or timing the market. Nope, it's all about understanding the person looking back at you in the mirror because they're the one calling the shots. So let me just ask you this, straight up. When you think about investing, what do you figure is the hardest part? Is it all the confusing charts, the jargon, trying to guess where to put your money?
Well, the answer is actually a lot simpler than all that. The hardest, the most unpredictable, and honestly, the most important part of investing is you. It's your own mind, your emotions, your gut reactions.
And that is the real challenge we're going to dive into today. See, it's not really about what the market is doing. It's all about how you react to what the market is doing. And getting that one thing right, well, it changes everything. This right here, this says it all. Look, markets will go up and markets will go down. That's just their nature. But real wealth, the kind that disappears, it's usually not because of the dip itself, but because of the wave of panic and bad decisions that follows. So how in the world do we deal with this emotional roller coaster? Well, the good news is we have a guide, and it's called Behavioral Finance. You can think of it like a roadmap for your own brain when you're dealing with money. To put it simply, behavioral finance is all about understanding how our very human feelings, things like fear, greed, maybe getting a little too confident, how all that stuff messes with our financial choices. It's the bridge between psychology and your bank account. Now, this is where it gets really interesting. For the longest time, traditional finance just assumed that we're all perfectly logical robots, always making the smartest, most calculated choice. But behavioral finance gets real. It says, hold on a second, we're humans. We're emotional, we have biases, and sometimes, we freak out. All right, so we've established we're not robots. But how exactly does our very human mind, play tricks on us? Let's pull back the curtain on a couple of common mental traps that can get in the way of your wealth. This leads us to the first big idea, emotional bias. So a market dip happens. That's just a thing, an event. But the real moment of truth, the fork in the road, is your internal reaction to it. That one moment can decide pretty much everything. And this slide just lays it out perfectly. The emotional investor sees the market falling and their brain just screams, danger, sell everything, get out now. But the rational investor, they see the exact same event and think, ooh, a discount, things are on sale. Same event, totally different reactions, which lead to completely different results down the line. And that brings us to the next mental trick, which is called framing. The story you tell yourself about what's happening, the frame you put around it, that story basically dictates what you're going to do next. For example, let's say your portfolio is down 15%. If you frame it like this, oh my God, I'm losing money, that creates panic, right? It creates fear. And the natural instinct when you feel that way is to sell, just to make the pain stop. But what if you use a completely different frame for that exact same 15% drop? Hey, things are on sale. Suddenly, that feeling of panic is replaced by a feeling of opportunity. You start thinking like a savvy shopper, not a victim. Your frame changes everything. Okay, so we know our minds can get the best of us. So what's the actual secret to winning this game? You might be surprised. It's actually way less about being a genius and much more about something else entirely. See, you don't actually need to predict the future or have a fancy degree. The real superpowers for long-term investing success are just character traits. Simple things like patience, discipline, keeping your cool when everyone else is losing theirs, and just having control of your own emotions. This is maybe the most important slide. Here's the real formula for wealth. You've got your money multiplied by time and the absolute magic of compounding. But then, all of that amazing growth gets divided by your emotional mistakes. And here's the key. The one part of this equation that you have almost total control over is the bottom number. Your job is to make that number as small as possible. So let's bring this all together for our final and I think most powerful section. All of these ideas, the biases, the framing, minimizing your mistakes, they all point to one simple truth. The goal isn't to master the market. The goal is to master your mind. This is the secret sauce for basically every successful long-term investor out there. They know the market is going to do what it's going to do. It's wild and unpredictable. The only thing they can truly control is their own behavior, and that's where they put all their energy. Just think of it like this. The market has a system. It consistently rewards stuff like patience and self-control, and it consistently punishes fear, greed, and impatience. So all behavioral finance is the art of moving yourself from the punish column over to the rewarded one.
So the next time you see those crazy headlines, or your portfolio takes a dive, or everyone around you is panicking, I just want you to remember this simple fact. The market doesn't get the final say on your financial future. Your behavior does. The choices you make when the pressure is on, that's what really counts. And really, that's what it all boils down to. This is bigger than just investing. It's about mastering yourself. Because when you finally learn how to manage your own mind, well, managing your money just kind of falls into place. And just a quick note before we wrap up, this content is for educational purposes only, and it is not investment advice. Always make sure to consult with a qualified financial advisor. Thanks for joining me on this one.